Welcome to the STR Data Lab.
Hello and welcome to the STR Data Lab. I'm Jamie Lane, Chief Economist at AirDNA, and I am joined again today with my trusty co-host, Scott Sage, our SVP of Marketing. Scott, good to see you.
Great to see you again, Jamie.
So we're sitting here recording a little late in February on our January sort of review. So we've got most of February already in the books, but I think we're going to do a quick rundown of what we saw in January, but also I think part of the reason why we wanted to wait to record is we got Airbnb, Booking, Verbo all reporting their fourth quarter, and it's always a treasure trove of info when those companies report because the vast majority of industry bookings are coming through their platforms, and it really gives us a sense of what they're calling out, what the trends they're seeing, and then I think most importantly, how the market's reacting to that sort of growth story. So lots of fun things to dive into.
Earnings season is a treasure trove of data, especially for a data junkie like yourself and for our company. But you're right. There's a lot of good takeaways. One, just it provides great connectivity between how the OTAs are actually performing and the data we're forecasting and talking about month over month. That's number one. And number two, for the professional investor, the professional manager, the individual host, the potential investor, right? There's a lot of good data emerging from all of this. I think maybe, Jamie, let's dive in here. The headline is all three very strong and a lot to be encouraged by if you're in this industry.
Yeah. And maybe just start top line for Booking, Expedia, Airbnb. Booking Q4, room nights booked were up 13%. Expedia nights booked were up 12%. Airbnb nights booked were up 12%. Across the board, you look at those numbers, everyone up 12, 13%. That's good. But for Booking and Expedia, most of their business is hotel bookings. So we got to go next layer under. And Booking is what really surprised me because they had been running roughly in line with Airbnb, maybe a little bit above, but they came in with Q4 bookings up 19% for alternative accommodation, which is massive. And that's on top of they disclosed supply growth for alternative accommodations. That was only up 8%. So we always talk about supply growth, demand growth. We want demand growth to be greater than supply growth. You tell me that Booking only saw 8% increase in listings and a 19% increase in bookings. My response to that is let me know where those guests want to go because I want to get my bookings in front of them.
It bolsters and reinforces the importance of if you're a host listening to this and you're not multi-channel, you're missing a huge opportunity. And so it's no longer just single channel Airbnb, who did have strong performance in their own right. Yep. But that growth from Booking absolutely crushing Q4 expectations. How does that trickle down to you, Jamie, the new host who just launched your own Airbnb property, your own short-term rental? It tells you need to be going Booking, you need to be going Verbo and Airbnb. Multi-channel is where you're going to have success.
Yeah, I can tell you February, I've been booked solid. My breakdown has been half Booking.com, 30% Booking.com, 30% Airbnb. And I've actually gotten half or a third from direct. And it was because I posted on my Facebook, hey, we're getting into February. It's low season. Message me if you want to book. I'll give you 20% off. And got some old high school friends that booked the property. So
look at you. You got the marketing gene in you.
But it is all to say, if I would have only been on Airbnb and not sort of having those other channels, it would have been a weak month for sure. And then Booking did disclose where their guests are coming from. And over half of their guests are booking from Europe. So still definitely a focus towards Europe. But I think they said as much as 1/3 of their guests US bookers are low double-digit percentages. So 10, 15%, maybe up to 20, but that is a growing piece. And if you are in the US, a US host, to be able to get those European travelers is a big one.
And it's It's a really interesting use case, right? Because one thing Booking does well and has an advantage compared to something like an Airbnb or a Verbo is you may be able to receive a booking from somebody who wasn't originally looking for a short-term rental because of the multi-search modal that they have on their site. And so you're inherently expanding your addressable market if you're listed on booking.com. And that could explain a portion of that growth in Q4.
Yeah, and if you listen to Glenn Fogel, their CEO, like he calls that out over and over again. That now such a large percent of those bookings are people that start their journey on Booking.com looking for a hotel, and then end up booking a short-term rental, and that wasn't their original intent, which is, and I think, and definitely grows the TAM, grows the opportunity for short-term rentals to be able to take back share. And then the other one, Expedia. So we had been talking about sort of weakness for Verbo. And while Verbo wasn't as strong as hotel bookings for the platform, hotel bookings were up 14%. Verbo still, according to my calculations, grew about 7%. That's decent growth. And when you take into account that the majority of their bookings are North America, and when you look at North America, US growth for Airbnb, 7% is actually pretty good because, and we'll talk through and how the US is performing, and that's about on par. So they are now sort of at least maintaining their share, not losing it. And yeah, I think it's nice to see Verbo and sort of contributing to growth again. And I suspect Expedia is going to be putting a lot of marketing dollars into it to make sure that their platform remains top of mind.
And you talked about it, US performance for January. So why don't we go there? And it starts to, you see some common themes with strong performance for January compared to the prior year. And maybe the headline here, Jamie, record-breaking bookings in January that we've seen on record.
Yep. So, and it's, January's always my bellwether for the year because January, and it's really right after the holiday season. You sort of kick off spring break, summer booking season. January is one of the strongest months of, if not the strongest month of the year for US bookings, especially in Europe as well. So what happens in January can really set the tone for the rest of the year of like, are bookings going to be strong? Are we going to have pricing power? Because if January starts off weak, then the rest of the year, you're sort of in catch-up mode, you're discounting, and it can really sort of snowball into a weak year. So looking at January bookings, and so I'm going to throw out three numbers, and the first one's going to sort of give the context for the other two. So first, starting with supply growth, because for me, like it's hard to think about nights booked and demand without looking at supply first. So supply was up 4.3% year over year in January. And now we're at, I think it's like 5 consecutive months of supply growth lower than 5%. So as someone competing in this market, like 4% supply growth, like feeling good. And now we look at demand growth. And so nights booked, demand stayed. So nights booked, how many nights were booked for stays either in January or for any future time period was up 8.9%. So that's amazing.
And it crossed 20 million for the first time ever.
Yeah, over 20 million nights booked. So that, and most of that is for like spring break period. So February and March. So people getting those bookings on the books. So, and that sort of sets us up for a strong Q1. And then on stays happening in January, January is a relatively weak month for overall bookings, but we did see it up 7.2% year over year. When demand's growing faster than supply, that means we have occupancy growing, and we saw occupancy increase about 2%. So still below 2023 levels, but above 2024 by a decent percent in what is usually the weakest month of the year for occupancy. So a decent month on the demand side, especially for bookings.
And as you talk about that demand outpacing occupancy, you saw that as well. Typically that can lead to a rise in rate. And so we saw ADR increase just north of 5% year over year to $313 a night. And then repeat rent index increased 6% year over year. So all positive signals here as we look at this data and just pick our heads up as we start 2025 and say, as a potential forecast for the rest of the year, we're off to a good start here, Jamie.
Yeah. And when we talk about our forecast for full year, and we're definitely, and January's coming in above expectation. So if we're leaning anywhere one way or the other, like that, and when we get to sort of updating the forecast, though we might have to raise it a little bit, things coming in a little bit hotter. When we compare short-term rentals against, let's say, hotels in January, hotel ADR saw the same trend of ADR sort of increasing from what we saw in Q4. So hotel ADRs were up 3.4% in January. And we also saw it in broader inflation trends. CPI was up 0.5% for the month, up 3% year over year. So, and there is a little bit of worry out there in the economic circles of like, all right, is inflation coming back? Do we have to worry about as we think about 2025? And that will start to show up in 10-year treasuries and interest rates, so 30-year fixed rate mortgages. But we've actually seen some positive news there. From 10-year treasuries reached a high in January of 4.8%, are now down as of taping to 4.4. And similarly, 30-year fixed rate mortgages reached a peak in mid-January of 7.3% and are now down to 6.89 as of today. So some pause. I can't say that 6.89% for a 30-year fixed rate mortgage is good as taking that investor
Maybe
lens,
comparatively, right? Yeah.
Comparatively, yeah.
And now, Jamie, this is economics corner time.
Yeah.
And so help me understand as a potential short-term rental investor, why I need to care about the 10-year.
So if you think about interest rates, and there's the short sort of dated stuff, like an overnight rate, like what do business have to pay? Like that gets set by the Fed. And the Fed is essentially pausing on lowering interest rates, and given the sort of high inflation numbers that we've received the past couple months. But what really matters for investors is the 10-year treasury, because that's really what and the 30-year fix gets sort of based off of. And that has more to do with like inflation expectations, like what do investors expect and what is sort of output of the economy. And then any risk that the government won't pay our debt. And there is, and I guess always, and U.S. debt is probably the safest thing in the world. But there can become worries out there when the debt gets too high, when certain people get control of the treasury. So there is a little bit of worry, and that inflation could pick up again. So that had led to the 10-year to increase a bit in January. Now it's coming back down some. So, but you look at surveys out there of what consumers expect prices to sort of increase or decrease. And there is becoming more and more of consumers that are expecting prices to go up. And when people expect prices to go up, they're more willing and able to accept price increases. And that can be a snowball effect. So definitely a worry there, and maybe why we're going to be in this period of higher 10-year treasuries, higher interest rates for longer, which could mean lower supply growth for longer if it doesn't turn back into a really attractive rate for investors.
So we could see similar sustained trends as to what we've seen in January or maybe at the end of last year. Let's dig into January's performance a little more and maybe look at specific market types that had strong months. And mountain and lake markets benefited from some of the weather patterns we saw in January.
Yeah, it is a quite an interesting thing when you see ADRs and sort of mountain lake areas up and 10+%. And you sort of dig in and it's like clearly and strong ADR growth in some of the sort of ski resorts. And you look at snowpack levels, like overall, and they're doing relatively well compared to last year. So yeah, and things in a lot of the ski markets are doing well. And we're seeing the East Coast have a much better year than we saw in 2020, 2024. And then, and something we're continuing to keep an eye on is just, and we're still in this sort of mode of impact from the hurricanes. So it's fun to, or it's bad to think about like, and 2 or 3 months on that we're still in this sort of mode of being impacted. But you look at markets like Asheville, Western North Carolina, and you see even down into Florida and some of the impacted markets and what are typically low periods, we are seeing stronger bookings as more and more people are sort of displaced. Short-term rentals are being used for housing. If they are able to be used, we're seeing hotel demand in those markets is skyrocketing. So actually in the US, when we look at overall in the Southeast, demand for short-term rentals is actually underperforming a bit. Demand for hotels is like through the roof. It actually brought the entire hotel industry into positive territory because so many people are sort of displaced. And there's so much destruction in short-term rentals, like, and we're actually seeing overall demand, like in North Carolina, down pretty significantly. And that can sort of play into some of the ADR trends as we see sort of units pulled out and stronger occupancy in others.
And then we also saw, as we look across market type here in January, small city and rural markets experienced the largest demand growth at 23% year over year.
Yeah, they're still just crushing it. Like, and we've talked about this in the past, but, and if you would have told me in 5 years on from the pandemic that small city rural would still be the fastest growing sort of location type, I probably would have called you crazy. But and it's still a relatively good regulatory environment. Like a lot of these small city rural areas aren't putting in regulation. You see home values that are still very attractive, which you talked about when, and we put out our best places to invest report, and consumers still really want to go. And this sort of, I think as an investor, and you're seeing more and more properties turn into the destination where you don't have to have the major demand driver nearby of, let's say, in a city or a lake or mountain resort, that your property can be the destination. You can get people to drive to it. And that's more and more the type of properties people want to book. And they're able to, be that destination in themselves.
I think it's a really good example of the importance of doing your analysis when looking at a potential new market or a new property. Underwrite how specific amenities make an impact on that market and that's performance. Because you're right, the property can be the destination, even if you may think the destination itself is not as attractive as maybe a big city or a resort. All right, Jamie. So that's January. Strong start to the year. Give us your forecast, your thoughts on what you expect to see for the first half of 2025, so Feb through June.
Yeah, and when we just think about the quarter, there are going to be some moving pieces to the quarter. We've got a leap year comp this year for February, so when we announce the February results, they're going to seem a little bit weaker, and that's because we got one fewer day in February. So just call that one out. We did have Valentine's Day on a Friday, though, which really boosted bookings. That was one of my favorite trends that I sort of saw across the data in February. So we'll definitely see the impact there of really strong Valentine's Day bookings. March and April are dealing with sort of the Easter calendar shift again, Easter moving from March into April. And it's just going to be an impact. So, but overall, first half of the year's and shaping up to be a very strong year. I'd note, and we're seeing it, I'm talking with different CEOs about it. Last minute bookings are still driving sort of a lot of the growth that we're seeing, especially coming through platforms like Airbnb and Booking.com. larger homes are outperforming smaller ones. So we see that in our data. The larger your listing, the stronger your growth and performance on both the supply side, demand side, and occupancy side. And when we talk about larger listings, we're essentially talking about homes that are 4 or more bedrooms. And then you look deeper into that, it's those that are amenitized, those that are sort of differentiating themselves. And I talk with so many operators that, and one of their biggest challenges right now is really getting homeowners to sort of connect that the reason why they're underperforming is the market is sort of adapting. It's really changing. And the sort of cookie cutter 2 or 3 bedroom property isn't booking anymore without some sort of change, some sort of additional design, nicer amenities, things like that to be able to differentiate it. Yeah, not every property has to be on the beach or have a great view, but if you're not, you got to be thinking about how you're going to differentiate yourself. And the impact of natural disasters is definitely going to continue to be on the mind as we go through the first half of 2024. We saw the impact of the fires in Los Angeles. Immediate effect there was an increase in bookings as people were sort of displaced. You saw that in the Los Angeles area and really across the whole southern southwest of the United States, from Santa Barbara to Coachella Valley, even to in Arizona, New Mexico markets, seeing an increase in bookings as people were fleeing and maybe changing their travel plans. But I do expect we're going to see a decrease in bookings in Los Angeles as sort of the recovery goes on in that market. And we still see it in Maui a year after the fires there, as demand just hasn't come back yet.
Got it. Very helpful. Well, I think the takeaway for me here is encouraging results when you look at a macro lens with the 3 big OTAs reporting strong earnings, encouraging start to the year, looking like a strong 2025, and reinforces the need to do your research as you're making an investment. Jamie, any closing thoughts for you?
Yeah. There's still a lot of uncertainty out there, and there's some larger impacts that could be coming. And we always talk about jobs. And if people have jobs, they have higher incomes, they're going to travel. So there is the potential of the impact of the sort of government job cuts that we've been seeing, impacting both the DC market and markets that are dependent on government resources around the country. Could see an impact on travel to those areas, could see an impact of government travel if there is sort of budget cuts. And then sort of cross-border travel between Canada, between Mexico. We did a podcast with Catherine Ladcliffe a few weeks ago on the impact of U.S. travelers going to Canada, Canadian travelers coming to the U.S. Canadian travel is still a relatively small percent of U.S. travel, only about 3%, but we are in the sort of snowbird period, and where Canadians are traveling to can really impact demand trends. So luckily, some of the heat has been brought down between the two governments, so hopefully that doesn't impact any travel trends, but there's always... And that's something we're just keeping an eye on.
Awesome. Jamie, as always, thank you for the great research and information. Let's have another strong month coming.
Yep.